Why I sell term life insurance. My story is that 20 years ago I nearly died. I had 6 months to live. Now I never drank or smoked, but I had cancer in my eye. The good news is I didn't die. I had an operation. I can't see out of my right eye, but it still shows light and no one can tell. The bad news is I had life insurance and I didn't understand how it worked. I could have had over 200, maybe $230,000 given to me before the operation. I wish someone had explained life insurance to me. I'm going to simplify it. I sell two types of term insurance. One is regular term, and in all regular term policies, there is a terminal illness clause. So that if you got $250,000 in life insurance, on a terminal illness, you would probably get around $230,000, which could save your life and you would be able to go somewhere or get some treatment and live. So it's important that you have life insurance because they pay out. Now, there's a living benefits type of life insurance, and I recommend that everyone gets living benefits. If you want to add another policy with regular term, which is cheaper, then have two types of life insurance. On a living benefits, which would you rather have? Someone else receives the money after you die, or receive money so that you can stay alive and get healed? Well, living benefits offers terminal illness, critical illness, chronic illness, accidental death as a rider, child rider, disability riders, and sometimes a critical injury rider. So it's important that you understand what is available on the market in term insurance. Now, I work with a broker and I have options beyond what one company offers. And I sell with integrity, not deceptively like many do. I don't sell based on the commission that I'll get. It's not about it's about information, not manipulation. Now there's different types of insurance, okay? And this chart gives a number of different ones. There's index universal life, fixed universal life, whole life, term, large case products, fixed indexed annuities. Now, what you have to understand is what is ahead for all of us. And it is a possibility that the stock market will crash. And even though you're in an indexed universal life policy that won't lose its money, you could stay at the top instead of uh, jumping in at the bottom. So what's important for you to understand is you start with a term insurance and they are convertible. Many are convertible right up until the end of the term, but term policies you can convert to any of the other types of policy within a set period of time, so that if you see the stock market is doing good or you want to have something that lasts for your whole life and increases in value, then you can do that after you buy the term policy. Now, the true cost of waiting on a 500,000 20-year term. Remember that inflation eats up money. So the sooner you get insurance, the cheaper it is. And you can see on this chart how that works. It's always true that females get a better rate than males because males don't live that long. Now, I have had insurance since I was 21 years old. I believe in insurance. Now, there's different life insurance needs, and you can see that. If you have a young family and you're just starting out with children and so on, you need life insurance. And so it's important that you spend the time to talk about this. Wisdom says keep your risk as low as possible. Okay? Now there is real versus nominal risks. And one of the things that is not talked about by people selling insurance products that have cash value is the inflation rate. And as I'm making this video in August of this year in America, the inflation has been 5.4%, which is very high, and it doesn't look as if it's going up or going down, but going up. Give you an example. I bought a rotary engine Mazda in 1972 and paid $2,500. Wish I kept the car. Today, a Mazda is worth $53,000. Get the picture? So insurance is not always the best risk for gaining value if the inflation is high. Now you do get protection from the index in your performance. If you switch over at the time that the market is low, then an indexed universal life policy is a great idea because you ride it all the way up. And if the stock market goes up and down, it locks you in so that you don't lose your money. So there is a time to buy indexed universal life, and we can discuss that when I meet with you and talk with you. So that's my story, and I wish that you would take a look at this and consider giving me a chance to give you a quote on the two types of policies that we start off with, a regular term and a term that has living benefits. Thank you so much, Tim Sauder.